Hey everybody, it's your boy Sean McLaughlin at Options Sean on Twitter. Today is Thursday, June 5, 2025. Hope you're doing well. Hope you've had a great week. The bull market is back. Let's look at some charts, shall we? Before we do that, of course, I have to show the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from seeing me follow my process. All right, so let's bring up a chart here. Let's bring up the old S&P, the SPY. One thing that really stands out here is we are getting more and more distance from this circle right here. The big noisy circle that got everybody worked up, the death cross, right? Nobody likes to hear the word death cross. It's very scary. What is the death cross? If you're hearing this for the first time, it's when the 50-period moving average, which is the blue line here, crosses down below from above the 200-period moving average. There's a lot of people that will tell you that is very bearish and very scary, and you should go to cash and you should, hug your children and hug your wife because things are about to get really bad really fast. Well, in this case, things did get really bad really fast, but by the time we got that signal, the damage was already done, right? I mean, the day we got that signal was about April 14th, April 15th, which was right around here. If we zoom in a little bit, I mean, the worst we've already been through the worst. We'd already had a follow through day coming back up the right side of the base. So when you hear things like death cross and golden crosses, things like that, they make for nice headlines and they get people clicking, but it's just noise, right? The only thing that really matters is price, and moving averages are a lagging indicator, right? They're reacting to where prices have been, not to where they are. Not that there's anything wrong with moving averages. I use moving averages certainly for guiding me in certain situations for stop losses, but moving averages are not the end all be all. What's really important here is we've come back up, started about May 19th. We kind of hit a high and we kind of consolidated sideways in the S&P. Well, if you look at it today, it looks like we're breaking out. It's the same story if I bring up the Qs. We're starting to break out of this sideways slop. And I said this last week, the market is starting to feel more and more normal, right? Whatever that means. Longs are working. Some shorts are working, although they're not working as well as they were before. But we're seeing breakouts and we're seeing follow through where we would expect to see breakouts and follow through in a bull market. So that's the high level here. Let's talk about some of the positions we've exited in the past week. None of these are good news. Oh, no, I'm sorry. One of these is good news, but we'll start with the bad news first. Let's start with LB Landbridge Company. This was a calendar spread that we got into on May 21st. We thought we were being clever buying the dip off of this breakout. But it turns out that was the shakeout. We once Landbridge closed below $75 a share, that was my signal to get out. And I'm still feeling pretty good about getting out. We got out for $3.90. We paid $6.25 to get in, got out for $3.90. Not terrible. A lot of that loss was cushioned by the fact that the July 100 calls that are part of that call calendar spread rapidly lost value faster than the November 100 calls. So that cushioned the loss quite a bit. That's one of the benefits of a calendar spread. All right, moving on. KC, Kingsoft Limited. Boy, we really thought when we got in here on April 23rd that we thought this stock was setting up to have another run like it had at the end of last year into early February, right? Where the stock went from $3 and change up to 20 plus. We thought we could at least get back to those previous highs. And it looked like it was going to do so. We had about 4 or 5 days where we were like, yes, we nailed the turn. But unfortunately, the market had other ideas, and we closed our November 25 calls for 25 cents. We bought them for $1, got out for 25 cents. Hey, at least we salvaged something. All right. Now, next up is, I like to call this avocado, but this is Broadcom, ticker AVGO. This was a call calendar spread as well, a June-September 250 call calendar spread. We got into it for $6 back on May 1st. And boy, this stock more or less did nothing but go straight up since we got in, which is both a blessing and a curse. It's a blessing because it went up and we made money as a directional bet. As it went up, we made money. It was a curse because it went up too fast. I would have liked this move to have kind of happened a little slower or a little later after the June calls expired worthless so that I could be long the September 250 calls at a discount. But be that as it may, We got out of this thing. Let me adjust my chart here a little bit. We got out of this spread for 14.35. Why did we get out at 250? Well, with a call calendar spread, when you get to the strikes of the call calendar spread. So remember, when we bought this stock, or we got into this position, the stock was trading just shy of 200 bucks a share. All right. So when we put the call calendar spread on at the 250 strike, meaning I'm short the June 250s and long the September 250s, that was a directional bet. Okay. But when it gets to 250, I don't have the chart here for you, but a call calendar spread, once you get on the other side of the strikes, in this case, north of 250, then our potential profits actually decline. The maximum profit point of a call calendar spread at expiration of the short options would be right at the pin to strike. All right, right at 250. You want the stock to pin right at 250. What are the odds of that happening in our favor? Very low, right? So when a call calendar spread, when the stock trades to the strikes of my call calendar spread, if I still have the full spread on, for me, the best practice is to just close it down, book whatever profit I have, and live to fight another day. All right, don't let any of the profit go away. And in this case, we bought it for $6. We sold it for 14.35. So we more than doubled our money. Great trade, right? Well, yeah, maybe. If this thing keeps ripping, I'm going to feel a little bummed out that I didn't just have the long calls. Now, someone in our chat room, I wrote about this yesterday, a member of our chat room had a really creative idea for this trade. It's not something I did, but I kind of wish that I did, especially the way the stock has been behaving. But what he did is he had, multiple contracts on this trade, right? I don't know how many contracts he's had. Let's just say he had 10, right? So he was short 10 of the calls and long 10 of the September calls. Well, what he did instead of closing the entire position, he sold a portion of that calendar spread. All right. Let's say he sold like 3 or 4 contracts of the calendar spread and booked those gains. And he used those profits to cover the short options, the June short options. And now he's left with just the September 250 calls that he's got a built-in guaranteed profit on some of that, right? But he can't lose from here. So he now has the potential for unlimited gain from here. Very creative. I'm very glad he did that. I wrote about it on the blog. If you didn't see the piece, head to allstarcharts.com and head to the option section. You'll see my piece about that. Very creative. And hey, that just is a further reminder we talk about all the time here. Options give us options. And there's no one right way to do anything, which is both a blessing and a curse. Again, it's a blessing because you have lots of options. It's a curse because sometimes you get overwhelmed by all the choices you have, right? But that's one of the things about options. So we're out of avocado, Broadcom, AVGO. We bought it for 6, out for 14.35. Not bad, not bad. All right, let's move on to updated stops. We have a number of positions we're updating stops on this week. That's good because stocks are going our way. Let's start here at the top of the list, but this is no particular order, but ASTS, this is Space Mobile, finally starting to break out. We've had very good activity in the last 3-4 trading days. It's about time. We are long the August 40 calls. We got into this back on May 16th. We also had some May calls, just kind of a short little kicker, but those have expired, worthless. But hey, we still have this part of the trade on, and this thing still has the potential to pay us very well if we get a move in. I like the action we're seeing here. I'm now raising my stop to 22.50, which is just below these recent lows. I don't want to see ASTS get back below 22.50. If it does, the trade's probably dead. And if there's any premium left in those options, there might not be depending on when it happens. But if there is, I'll look to salvage whatever I can. But for now, the stop is 22.50. Next up is QBTS, D-Wave Quantum. We have flirted with a level to take some profits here. We want to see this thing get to 20 bucks. And if it does, I'm going to sell a portion of my position. It's all the details are in the blog post there. So you can look it up. But boy, we got close a couple times. I thought we'd get there. The stock is still behaving very well. I love the way it's consolidating, doing this high tightening flag here. But I am raising my stop to 14.50. I'd hate to see the stock get break below this range here. If it does, that would be a very bearish development to me. So I will look to close this position if we see any closing price below 14.50 in QBTS. Okay, here's a short position we have on KB Homes. We are long the September 50 puts. The position it's kind of working, it's kind of not working, right? I mean, as long as it's below this 50 period moving average, I still feel pretty good about this trade. I would like to see it finally and decisively break below 50. But for now, I'm lowering my stop in this trade down to 55.50. I don't want to see KBH get above 55.50. If it does, I will close these long puts and salvage whatever is left in the premium there. Should be able to salvage something, maybe a buck or two, depending on when it happens, especially if it happens soon. Next up, Groupon. Groupon, boy, this trade has been an amazing trade, and it's still doing well for us. We bought the October 25 calls. We sold half for 450 as was part of our plan during this spike here, and it's continuing its rise. Feeling really great about this position, but I am raising my stop now to 23.50. I'd hate to see it give back all of this build, all this tack on since this earnings release day. This is what this big green candle is here. This was the last earnings report. I'd hate to see Groupon give all of that post earnings drift. I'd hate to see it give it all back. So 23.50 is my new stop. And look, even if we get stopped out at 23.50, whatever we sell those calls will add to the gain that we already have locked into this trade. We have a small gain locked in right now because we paid 220 for these calls. We sold half of our position for 450. So we do have some built-in gain, a smidge, not a whole lot. So whatever we end up selling the rest of our position for, that will basically be our profit. And I think we're feeling pretty good. Our stop is 23.50. We'll probably raise the stop again in the coming weeks, hopefully. But Groupon, boy, I'm really liking the look of this trade. And finally, Take-Two Interactive. This was a call diagonal spread that we entered a couple months back on February 18th, where we shorted the April 240 calls and purchased the long August 250 calls. Those April 240 calls expired worthless. Great. They served their purpose. The purpose was to lower our cost of owning the August 250 calls. So mission accomplished. Thank you, April calls. So now we are just long the August 250 calls, and I'm feeling pretty good as this position is starting to gather steam. That said, I'm raising my stop to 220 now. I hate to see Take-Two get below 220, which would be below the rising 50-period moving average. That would not be a very bullish development for me. So any close below 220 gets me out of Take-Two Interactive. Okay, next up, let's talk about some of the new positions we've put on in the last week. For those of you who are new here, all of these trades that we discuss and all these trades that we put on in All-Star Options, we do a detailed trade plan for every one of them. You could find them at allstarcharts.com. Head to the members section and head to the options section. There you will find detailed trade plans for every trade we put on in All-Star Options. We talk about the setup, what we like about it, what option strategy we're going to use, where we're managing risk, where we may stop out of the position, if and where we may or may not take profits, or where we may make adjustments. All of those details are available in the blog for your reference so that you can make the trade your own and have a plan to do so. All right, so let's talk about these new trades we put on. I won't get into the details because, again, they're on the blog, but we got into a bullish trade here in Corteva, CTVA. So far, I'm liking the way it's started. It's basically gone up since we got in. That's always a good start. Same thing with Hood. We got long Hood last week. This is Robinhood. Great start. And boy, I said this in our chat the other day, and it bears repeating. This Hood trade, I am not declaring that this is going to be our best trade of the year. Okay? I'm not saying that. This thing could completely roll over and end up in a loss for us. It totally could. And in fact, it might even be likely to happen. But what I like about this price action since we got in Hood, and this is very similar to Groupon. If we bring up the Groupon chart real quick, very similar to Groupon. Well, I guess after earnings, it's not similar to Groupon. Never mind. I take that back. Because Groupon didn't work right away. But Hood, Robinhood has worked so far right away. And here's the thing about these types of trades. In almost every case, not every case, but almost every case, let's say 80% of the cases of my biggest winning trades every year, in 80% of those cases, I'm guessing, but it feels right, the trade started working almost immediately. And in this case, Hood has started working almost immediately. Again, I'm not saying this is going to be our biggest trade of the year or even a big win at all, but so far it shares the characteristics of all of my best winners. Okay? So that's something to be mindful of and something to be aware of and something to be optimistic about. And I'm optimistic. I feel pretty good about this Robinhood. All right, next up is Warby. This is Warby. I have the hardest time saying the name of this company. Warby Parker. Or is it Warby Parker? Warby Parker. Say that 10 times fast. We put a bullish bet on this one. You can see here we got into this trade yesterday. Again, all the details can be found at allstarcharts.com. All right, guys. These are the updated stops. I'd like to give you guys this little screenshot. I know one of you guys shared it in the chat this week for somebody. So see, great. This is why we do it. So take a screenshot if you need to. You can pause the video if you need to. Take that screenshot. Those are all the updated stops for our existing positions. And lastly, I've changed up the slide a little bit. If you have any questions at all, shoot me an email, info@allstarcharts.com. That will get routed to me, and I'll be sure to answer you as best I can. If you're not a subscriber to All Star Options, there's the link. We also do a free options newsletter. It doesn't cost you anything. I write 5-6 times a week, sharing anecdotes from trading, stories about positions we have on, or just things that options traders like you and me would find interesting. At least I think so. So why not? Why not subscribe? Be a part of the community. And finally, if you like my charts, TrendSpider.com is where I get those charts from. They're offering 50% discounts to anyone who uses goes to TrendSpider.com and uses my promo code Sean50. The links for all those, by the way, are in the YouTube chat, so you could easily click them there. And would love to have you get involved in all of these things. All right, be a subscriber to ASO, get the free options newsletter, and why not use TrendSpider charts? They're great. All right, everybody, this has been fun. If you're getting an early start on your weekend, enjoy your weekend. We'll be back at it next week. Until then, trade them well. Bye-bye.